right, we'd better get started. First of all, I'd like to acknowledge our chairman, Julian Malnick. He's come down with a bad case of COVID. So he sends his apologies and he's asked if anybody has any ivermectin to let him know. Now tonight it's rare earths. It's the big topic at the moment. You know, the politicians, the journalists have taken an interest in mining for the first time in a little while. Critical minerals is the new yarn. And it's a big shift. We've got the Albanese government releasing its Future Made in Australia policy, and that's all about onshoring the mining and processing of rare earths, obviously from China for strategic regions. We've seen Arafura Resources, they've got $840 million in loans and grants. Lynas has been heavily backed too by the government. And it's not just the public sector. Energy Fuels out of the United States, they have backed Astron down in the Murray Basin, up to $200 million of funding. Energy Fuels has the White Mesa uranium and rare earths refinery in Utah. They've also just bought out Base Resources, listed company out of Perth. They're running an alluvial strand-lined monazite resource out of southern Madagascar, $375 million. So this part of the market, it's moving and shaking, and we're lucky here in Australia because, as per usual, we're blessed. Lots of rare earth assets here. We've got strandline resources, obviously ancient shorelines, the Murray Basin, WA. It's mostly sand. Believe it or not, the Gold Coast used to be a massive sand mine. There's lots of monazite there as well. They ruined it with all the casinos. We've got carbonatites, of course. We've got one of them tonight. In fact, we've got two of them. We've got paleoplaces in far north Queensland. Julian Malnick's working on that with Tate Transition Metals along with Brian Duncan. We've got ionic clays as well right across the country. There's huge potential, but there are roadblocks. You may have seen in the Murray Basin, farmers have been arcing up. They're worried about the content, uranium and thorium content of the monazite sands that they'll be mining. They're saying that there'll be radioactive dust on their water tanks. So that's a concern, and the Victorian government's in an interesting position here. And rare earth prices, well, they're still low. High OPEX, workplace relations issues, power prices, you name it. But there is hope, because today we've got three companies. They're outstanding, and they prove that it can be done. We've got Lindian Resources. They'll be starting us off tonight. They've got a high-grade carbonatite in Africa. We've got Alister who'll be presenting in a second. We've got Australian Rare Earths, clay-hosted rare earth deposit in Victoria, near South Australia as well, just on the border country there. We've got Travis Beinke, he's the CEO, he's going to be presenting it. We've also got Venture Minerals, which is a clay-hosted rare earths project in WA as well. They've got extraordinary total rare earth oxide grades as well. So, look, that's enough from me. I'd like to invite Alister Stevens, the CEO of Lindian. Thank you very much.
Hi, ladies and gentlemen. Thank you very much for the invitation to present at the Sydney Mining Club. It's a my first Sydney Mining Club presentation. Righto, let me tell you about Lindian Resources. We have two assets. One's in Guinea, which is 1 billion tonnes of bauxite. I'm not going to talk about that tonight because the topic is rare earths. And this is about developing a rare earths powerhouse within Malawi. It is generally a Tier 1 asset. And hopefully I can step you through some of the metrics of this project that will prove that this is the case. So first of all, where is it? It's in Malawi. Malawi's in the southern and eastern part of Africa. There's a big lake that's part of the Rift Valley system, which is called Lake Malawi. It's 650 kilometres long, 150 kilometres wide, by almost a kilometre deepest at its deepest point of fresh water. And the only river that comes out of that is a river called the Shire River, or Shiri River is what they call it in Malawi. Goes through that town in Lawandi, which is on one of those slides there, and travels at about 1,000 cubic metres per second. It's one hell of a river. The site itself is located south of a town called Beinke. It's got 36,000 people. Ideally located, unbelievably lucky to be located around some infrastructure. There's high voltage power lines there from a hydroelectric power scheme. That's 132 and a 66 kVA line. The M1 highway runs up 5 kilometres from site, and Beinke is only 20 kilometres from site. So it's very close to existing infrastructure, so no need for airports or camps or things like that. The red box in the middle is a mining licence. The blue box around the outside is our exploration licence. And that pimple in the middle of the red box is Kangankundi Hill. I nickname it the King because people have a bit of linguistic issues about speaking or pronouncing Kangankundi. Today we released an updated mineral resource estimate which included that indicated resource category of 61 million tonnes at 2.48%, so that's 24,800 ppm total rare earths. With an NdP ratio of 20%, it's got about 300,000 tonnes of NdPr. Then the inferred category takes us up to a total of 261 million tonnes. Within that indicated resource category, which is our focus, there's a higher grade portion of 25 million tonnes at 3.26% TREO. And that's going to be basically the focus of our mining studies and mine scheduling, about how we optimise that to produce a higher grade product for feed to the mill. We've completed most of our studies, the ESIA, Environmental Management Plan, resources, geotechnical studies. It's all ready to go. In fact, we're on track now to actually publish a feasibility study next month. So is that the end of the story, the 261 million tonnes? And if I could just point out on either side, both on the left-hand side, there's a dark yellow patch, and that's the surface footprint of the mineral resource, the whole 261 million tonnes. There's that fawny coloured mineralisation around the outside, and these two prospects, north and south. And the South Knoll and North Knoll have got some rock chips assays on them, and there's some material going 2, 3, 6%, up to the North Knoll where it goes up to 7% in grade. We know that mineralisation around the MRE is also mineralised, so there's the potential to extend the surface footprint of this thing. So the other cross-section there shows the relationship between the indicated resources on the surface, the inferred resources below that, and we did 2 deep drill holes underneath the inferred resource. The first one there went 854 metres at 2.73%. That first interval, it's not actually assay, or we did assay it, we just don't tell what the assays are. The first interval there in the yellow zone went 0.5%, and the material down the bottom in the brown material went 0.7%. The second drill hole, which is not shown, which came into the section this way, was 1,000 metres at 2.6 with a high grade zone of, if my memory is correct, 805 metres at 2.9% TREO. So, does this extend below the inferred resource by 1 or 2 steps below that? Probably. Is there 750 to a billion tonne type resource that's somewhere around 2 to 2.5%? Absolutely. So it is an absolute giant of a deposit. And this is what the mineral resource estimate looks like in a grade tonnage curve, and I don't know whether people here are got the I don't know your technical background, but this gave us the relationship between grade and tonnage, and we chose at that down the bottom, if you read the 2.5% and bring it up, there's a line there that says 3.26%, so that's the grade of the mineral resource. You go up the tonnage line and it says it's 25 million tonnes. So in this relationship you can actually work up and down the graph and say, okay, if we increased our cut-off grade, we can actually get smaller tonnes, but we get higher grade. So this is what we use to input into our mining model to work out what the optimised outcome is for mining. Now the next slide is probably the most, this project, I've been in this industry almost 35 years in mining, and this is the most unusual deposit I've ever come across in terms of a mining relationship. So that big footprint there on the left-hand side is the surface expression of the resource block model, the inferred resource of 261 million tonnes, and the darker areas there are what we're focusing on. They're the little high-grade pods, which represent around about 10% of the surface area of the deposit. So now if you go to the cross-section, we're talking about what is the relationship of the inferred resource to the mineral resource, and what's the grade look like within the cross-section. So you can see, I need to get off the stage, right? Oh. I'm looking at this pod here. That's going 4 to 6%, and this pod over here is also going 4 to 6%. So this one over here, so this little zone here, and that zone there. They're going to form the basis of the first mining schedule. So it's starting in the high-grade material. The odd thing about this is that we can probably start with a 0 waste ratio. But when you actually start taking low-grade mineralisation around The high-grade zones, you're actually mining mineralisation. You're not mining waste. So every time we mine an extra strip ratio, we're actually developing a mineral resource category as measured reserve, which goes into proven resources. So this is an unusual deposit. The waste strip ratio initially is likely to be 0. Further down the track, when it increases strip ratio, we're actually stripping out and storing and stockpiling lower grade material for future mining studies. The other thing is that we're mining up a hill. So your trucks are going up empty and they're coming down full, which means you've got efficiency in terms of fuel consumption. So some really good mining studies going to come out that within the next month. So what's our business model? You see the amount of money spent going downstream into hydrometallurgy and the risk taken in technical, and we're not doing that. We're sticking to a simple process of mining, beneficiation, and producing a monazite concentrate, because this is one of the most unusual deposits in the world. We've got good recovery, we've got great concentrate grade, we've got a very good NdPr ratio, but most important, we've got a non-radioactive monazite. Now, it's probably the only non-radioactive monazite in the world that's of this scale, that's for sure. So you see people saying, I'm going to explore for monazite, I'm looking for radioactive zones. This is a deposit that says you shouldn't look in the radioactive areas, look in the non-radioactive areas, because monazite does exist in a non-radioactive form. That's probably the most dexterous commercial aspect we have of this deposit, because it becomes a general good, which means we can transport it anywhere in the world without the necessity for class 7 radiation goods type material. So it's a general good transportation. Also means it's cheaper. So just a snapshot into the market. From 2010 to 2020, the NdPr market grew from about 20,000 tonnes to slightly over 40,000 tonnes per annum. So that's a doubling over 10 years. Last year it was around about 55,000 tonnes. If you take two projections here, one is the old trend projected forward versus what people think the trend of consumption is going to be, is somewhere between 20 to 50,000 tonnes of extra NdPr needed in the market by 2030, which is not long away at all. So in terms of price, I've tried to collate there various groups that have an opinion on price. And the thick dark blue line plus the red dashed line is probably the ones you will focus on. The thick blue one is Project Blue. So they're a research group. And the dip in the price there is basically, well, they're saying this, first of all, there's going to be a price recovery from around about 60 at the moment to, what's that, around about almost $100 a kilo. And there's a slight dip in there where they're saying, well, if all the projects that are on plan to be on production come online, there's probably a dip and a slightly oversupply before we come back to a price recovery when there's then a deficit in the market. If they don't come online or they're delayed, then the red line is kind of the trend where you think NdPr price is going to go. So with a massive resource, what's our focus? It's development, because we have a fully permitted project. We have our mining licence, we have our ESI certificate and licence, we have our explosives licence, we have our water permits, so it's fully permitted to go into construction and production. And what we'll report in this quarter, which is only a couple of months to go, is the feasibility report. So we're right now doing all our mining schedules. They'll drop out our ore reserves, feed into our feasibility report. Our CapEx and OpEx will drop out. In fact, I'm 98% certain of what our CapEx is, and I'm 98% pretty sure about our OpEx prices as well at the moment. So that's what the news flow is going to come in this next quarter. The next box really is going to be updated in the future about what's the value proposition of the organisation, what's its NPV, what's its EBITDA, what's it really going to do in terms of our value for shareholders. So it's really just filling in some things about what is our strategic position at the moment, superior asset, superior quality product with massive scalability. And in fact, just to give you a test of, or an insight as to what our plan will be, first stage is around about 10,000 tonne per annum of rare earths. So it's a very small plant, it's about 450,000 tonne per annum. Really, that is positioning this project as an entry point into the rare earths market, saying, okay, over the next 2 or 3 years, we'll de-risk this, we'll get and understand what our mineral deposit variability looks like, we'll optimise our plant, who wants what product, and what scale do we go to next? Because this has the capability of producing, I don't know, 30, 40, 60,000 tonnes of rare earth per annum as market demands it. And we can strategically grow that company over that period of time as demand comes along. So this is our aim, to be a leader of the best value and most cost-efficient producer of concentrate in the rare earth market. It is sustainable. With access to this hydroelectric power, our carbon footprint's very small, very low, and there's a future opportunity of actually converting our mobile fleet into electric. Electric trucks go up empty, they come down full. So it's actually ideal for electric truck fleet conversion. Not yet, let's get going first with a diesel fleet. And then positioning ourselves as a growth opportunity and expand. I position this project as it's like a disruptor. It's got the capability of actually really disrupting the rare earth supply chain. More importantly, it's an enabler. So if you're a downstream magnet manufacturer, your business plan is basically every year, because your quota system that comes out of China is the limitation on what your business plan in the future is. So how can you grow? How can you have a 5-year plan? How can you have a 10-year plan? This is the project that if you're a magnet manufacturer says, I now have a business plan downstream where I can grow the industry. Now, last one I'll finish with is Kundi the King, because it's the nickname. But this is actually our traditional area senior village chief. His name's Nkosi Chantunya. And he and his community have been extraordinarily supportive of this project. It's really, the relationship I have with him and the next down senior chief and the village chief, who's a woman, Makalela, who calls me brother, has been fundamental in our success in this project. Bear in mind, we've had this project 20 months. I've done all those engineering studies within a 20-month time frame. So I couldn't have done this without those people. And I couldn't have done it had I not the right kind of access to historical information that allows me to fast track this engineering. So I'm not that clever. I just used old information and leveraged off it to actually make it look like I was good. This is a superior tier 1 asset. It is actually crucial to global supply and it's got massive scalability. So ladies and gentlemen, that's the Lindian story. We're no longer a resource or an exploration company. We're in development. It looks like a 12-month time frame. Once we understand when our development schedule kicks off, I can tell you when we're going to be operating. Thank you very much. Yeah, sure.
We have enough time for a couple of questions. Gerardo?
What percentage is 30%? What percentage is heavy rare earths in that?
Oh, very little. So NdPr combined is 0.1%. So there's no credits in our sales contract for that. Funnily enough, you get a little bit of a sale credit for cerium and lanthanum, which was unusual. And SEG is a little bit of a kicker as well, but 95% of your value is in NdPr. Yes, sir.
I'm very curious about your non-radioactive monazite. Can you talk a little bit about that? How maybe geologically how that would come about? Because it's an anomaly.
Apart from magic?
Well,
No.
I don't think.
Do you know Leon Pretorius? He was one of the original founders of Deep Yellow. We had a talk with him one day. If you have elevated levels of cerium in your monazite, it preferentially displaces thorium and uranium. So we end up with a depleted thorium-uranium product. However, the uranium grades in the carbonatite in total go around about 2 ppm uranium and around about 20 thorium. So it's depleted itself. And in fact, when you drill and you see these breccias come in on the side, you can see the actual uranium and level and thorium kick up because you've got granites and whatnot contaminating the material. It's not the carbonatite, it's the host rocks that have this elevated. So there's a really good handle at the moment about rock type differentiation around uranium and thorium. But the reason it's depleted is it's high cerium, which means it's a light rare earth project.
One more.
You talked about beneficiation. What extraction methods are you using? What does the process flow sheet look like?
There's 3 types of mineral deposits in rare earths, typically a basnazite, rare earth carbonate, monazite, rare earth phosphate, and the most difficult one between which you get a combination of basnazite, carbonate and monazite together. We're lucky that 99% of our material is monazite sitting in a carbonatite. So the rare earth monazite's heavy, it's density around 5, 5.5. The waste rock's about 3, it's gravity separation. So we're doing mobile crushing plants first up, grind size to 75 micron. We're going straight to a multi-gravity separator, which I won't explain here. It's a continuous drum rotation system, into a WIMS out the back, straight into a press. That's the system. So no chemicals, water only. Apart from the thickener, you got flux. Okay, thank you.
Travis.
Okay, thanks for having me. Thanks to the Sydney Mining Club for hosting the rare earth event. Obviously a pretty depressed market at the moment, so it's great to see so many of you interested in the rare earth market today. Thank you. Maybe before I kick into all things about Australian rare earths, I'll just touch on a few things about the market. Comes to one of the earlier questions as well. I think there's one thing that I don't think is really well understood in the market, and that is the supply side risk of heavy rare earths, the dysprosium and terbium. Today, almost all of the heavy rare earths come out of the ionic clay projects that are essentially controlled by China. If you then look around the world with all the projects that might get into production over the next 3 or 4 years, they're primarily light rare earth projects. There's not a lot of heavy rare earths that are shovel ready or looking like they might come into production anytime soon. So really to fill that heavy rare earth supply gap, it's going to have to be the Western ionic clay deposits. And if you look around, none of those are shovel ready either, essentially. So that's why we believe that projects like our Copper project, which has a really good assemblage of heavy rare earths, so we're running at 21.5% NdPr and around 3% heavies, DyTb. It's those sorts of projects that have a pathway to production over the next few years that I think will be really valuable in the market, but also by customers who are really desperate for that source of heavy rare earths. So if we move into the usual disclaimer. So our flagship asset is Copper, our rare earth project in the southeast of South Australia. To date, we've identified a really large resource, and we have a project that has a lot of exploration upside, given the tenure that we have. We've also identified a sustainable development pathway via a heap leach approach. We expect there to be a much lower capital and operating cost environment with that, and also a lower technical risk compared to some of the more complex hard rock deposits you might be aware of. So we believe Copper has a pathway to be into production, to be Australia's first ionic clay project into production. And to complement this, we've built out a team that is developing a really strong exploration portfolio of early stage projects that we think will give us optionality, flexibility and scale to add into the company as we develop. So just a quick look at the corporate snapshot. Two key things here. We're really well funded. So we've got just over $9 million in cash as at March. So we've got a really strong position to fund all of the projects that we have and make meaningful progress with those projects over the coming months and quarters. We've got a really strong long-term shareholder base, which includes Neo Performance Materials. Why is Neo important? So Neo is one of the few Western companies that have separation capacity, so rare earth separation capacity outside of China. So they are a potential off-taker for our product. So we have a non-binding MOU with Neo for them to take 50% of our stage 1 production and an option on stage 2 production as well. One of the benefits we also have with our relationship with Neo is that we have access to their technical team. So we have people from Neo on our team, technical review as we develop our flow sheet and ultimately produce a saleable rare earth product. So that's a massive advantage for our team with that strength. And you may have seen today, Meteoric has also entered into an MOU with Neo for some offtake for their project in Brazil. So just a quick look around where all our projects are. So Coppermurra, the flagship project's in the southeast of South Australia. It does border the South Australian Victorian border. The majority of our tenure is on the South Australian side and the side that we look to develop first. We've got some new early stage exploration projects in North Queensland from a rare earth perspective, and we recently entered into an option to acquire the Overland Uranium Project in the Murray Basin of South Australia in what's a potential new uranium province, and I'll touch on that a little bit later. But at all of our projects, we've got a substantial land package providing lots of greenfield exploration opportunities ahead of us. So now we'll delve into Coppermurra. So like I said, we believe that we've got a multi-generational asset at Coppermurra that can be providing magnet and rare earths into the market for decades to come. If you look at the sheer size of the resource potential, it is significant. So we've got just over 7,000 square kilometres of prospective tenure there at Coppermurra. Much of it is still to be explored. The deposit, if you look at the setting there, it's a little different to what you would traditionally see. It's the rare earths sit in the clay over a shallow limestone base, and it means that the deposit's typically less than 10 metres deep. So what does that provide? That provides quick, low-cost exploration, and ultimately when you get into mining, it'll be the same. So we've got significant resource growth potential, given that if you think about the southeast of South Australia, some people might know it as the limestone coast. So that setting of clay over limestone is extensive throughout our tenure position. Just a little more on the resource as we continue to grow confidence in the size and scale. We've drilled a little over 65,000 metres since 2021. We've defined a resource of 186 million tonnes at just over 700 ppm. Importantly, the current resource sits on only just 2% of our total tenure. Our exploration target of 300 million to 3.1 billion tonnes is on only 20% of our prospective tenure. So it provides significant upside for resource growth over time. Late last year, and you can see on the screen where we've highlighted, we've drilled another 8,000 metres. We've been releasing assay results from that drilling over the last few months. The infill drilling has confirmed shallow, high-grade subset of the resource, and the extensional drilling to the north has also confirmed high-grade rare earth mineralisation. So the drilling results will inform a resource and exploration target update that we'll plan to release in the September quarter of this year. And I guess the focus on those high-grade subsets of the resource is something that we're really focused on as we look to our development plans into production. So I guess if we just turn our attention to the flow sheet and how we've been developing that. In April, we released an update to our flow sheet design. I guess over the last 5 months or so, we've been conducting a series of column leach tests, and the initial results have been really encouraging. So what the column leach test work is essentially the lab scale test work that informs your ability to be able to move into a heap leach operational environment. Our initial results have indicated that the recoveries under that methodology is ranging somewhere between 42 and 72%. So really encouraging. Again, early days with the heap leach test work. So these results are unoptimised, and we're now in test work to continue to look at the leach optimisation, ore preparation as it goes into the heaps. We're looking at ore variability and how the recoveries behave over the different areas of the resource, and we're also starting to test the potential to take the heaps higher. So the initial column test work's been done at 2 metres. We've got a 4 metre column underway at the moment, and all the results from these next round of test work will certainly help inform and refine our capital and operating costs for for the project. I guess one thing on costs I'll just touch on. You're probably all aware, hard rock deposits that are out there. They can be expensive to bring into production. You're looking at $1 to $2 billion of capital to get into the production. Complex processing, so higher technical risk. If you look at the ionic clay type projects, those that are going down the slurry leach in tank approach, you're looking at around $500 million in capital. We think going the heap leach approach will be a significant reduction in capital and will be orders of magnitude less than that. So in addition to that, it's also going to be a lower technical risk. So we think being one of the lower capital costs, lower technical risk projects, we think that's going to be strategically very important as we try and advance the project and get into production. So this is what the conceptual flow sheet for Copper looks like. As you can see with the ionic clays and our deposit, there's no drill and blast, no waste dumps, no tailings dams. There's a focus on our ability to recycle water and reagents to help bring operating costs down. And one of the other important aspects that this will also allow is the ability for us to rapidly rehabilitate the land. The project is in farmland, so it's going to be really important that we minimise the impact or the duration that we are on the farmers' lands before we can hand them back, and so that's going to be a really important aspect of the project. Some of the other environmental improvements by going down the heap leach approach for us is going to result in a much lower water consumption for the project, as well as a reduction in power consumption from the tank alternative. Again, also it also enables an improved material handling characteristic of the clays, which will enable that rapid progressive rehabilitation program. So what does a rapid progressive rehabilitation program look like? So the photos on the screen here are a trial mining pit that we conducted down at Copper, where we excavated the clays and then placed them back in the pit and rehabilitated the land and handed it back to the farmer. So initial trial, we learnt a lot and we'll incorporate those learnings into our development plans as we progress the project. I think it's really one of those parts of the projects that I'm quite excited about. If you think about the opportunity to work really closely with your farmers to understand their soils today, and then what improvements we can make to those soils during mining and the rehabilitation program to hopefully provide the soils back to the farmers in a more resilient and a more productive state than what they are today. If we can do that, that's a long-term value creation that we can provide one of our important stakeholders. So that's something that we're really excited to work with our farmers on. So next steps at Copper, it's really focused around unlocking value by advancing the project to development. We have already completed the majority of the baseline environmental studies required for phase 1 of the project area. And I think what that also enables us with bedding down the flow sheet is the ability to move into preparation for a mining lease application. So we do believe we're the most advanced ionic clay project here in Australia and that we can be one of the first into production. And it's really at a time where I guess Western governments are increasingly committed to developing an alternate supply chain and showing the support to do that. So we're certainly really encouraged about the progress to date and look forward to further updates. Just quickly on the rest of the portfolio, like I said, we've just recently entered into an agreement to acquire the Overland Uranium Project in South Australia. The project area covers almost 3,000 square kilometres in what is potentially a new uranium province. There's been very little work done targeting uranium in this province. We believe that the tenure has the potential to have the characteristics required to host a sedimentary hosted uranium deposit. And we look forward to progressing the project. The applications are currently in. Once they are granted, which we expect to be in the third quarter of this year, we look forward to getting on the ground and demonstrating what we might have there. We believe adding uranium into the portfolio is good from an AR3 perspective. We're really maximising the expertise of our exploration team, and we feel like bringing early stage projects into the portfolio gives us the opportunity to for growth, flexibility within the portfolio, and also some scale over time. So just to North Queensland, where we have 2 project areas in what we believe will be highly prospective for ionic clay style of deposits in a setting that you would more traditionally see ionic clay deposits. So those that you would traditionally see in China and South America, where you've got that much stronger tropical weathering profile. The first area is the Dalrymple project, where we have 4 of the 5 tenements already granted. And we've recently had one of our geos up in site doing some initial soil sampling. We intend to get back on the ground a little later this year for some follow-up work, which will inform an initial drilling campaign. So early days, but excited about the prospectivity of the Dalrymple project. And then the second project up in North Queensland is the Kennedy province, where we have the Oakey Valley, Sandy Tate, 40 Mile Scrub applications, and the Massey Creek tenement already granted. We're really encouraged by work done by others in the area. So you've seen DevEx have some really good drill results with rare earth assemblage and some really encouraging initial metallurgical recoveries from the region. So once all tenements are granted, we're going to be up on ground pretty quickly to rapidly assess the prospectivity of those projects. So just quickly in summary, obviously a lot of exciting opportunities for us to progress, and we're really well funded to do so. The potential for Coppermurra to be the first ionic clay project here in Australian development is exciting. We've put together the team that can build out a really strong exploration portfolio that's going to provide us with scale, upside, and some flexibility within the portfolio. Ultimately, with the aim to create value for our shareholders. So with that, I guess I'll hand back for maybe a few questions. Thank you.
Any questions?
Same question as last one. What percentage in the heavy rare earths is it?
Yeah, so our assemblage, so we have around 21.5% of the TREO is NdPr, the lights, and then we're running around 3% heavies. Yeah, which if you think about other ionic clay deposits, that's up there with some of the better ones. Yeah.
How does it stack the clay? Does it have trouble stacking and holding its shape?
Yeah, so Rob, the initial test work in the columns has been quite good. We haven't not seeing any slumping or anything benching, so no problems at all. We've actually been quite surprised. That's one of the risks with clays in a heap is that it does that, and we haven't seen anything to date. So really, and I think probably one of the key things is the agglomeration phase. So there's add some binder and some of the sulfuric acid at the agglomeration phase is we think is helping in that in the heaping process. Yeah.
All right.
All right.
Thank you, Travis.
All good. Thank you.
Good evening, ladies and gentlemen. It's great to be here at the Sydney Mining Club, and again, I'd like to thank the organisers for doing this Rare Earth Day. And on such an iconic event, I've been dead keen to do this for some time, and I finally, I think, have the project to deliver that. And that project is the recent discovery of Jupiter, and it's a large-scale, high-grade, clay-hosted project or deposit located in Tier 1 jurisdiction of the Midwest region of Western Australia. And I'm going to talk a fair bit about the location and also about the record drill intersections that we've been achieving over the short time period that this has occurred. Here's our disclaimer. So Jupiter, back in early February, just before the Explorers Conference, we delivered an intersection of 48 metres at over 3,000 ppm total rare earths, which is a very high-grade clay-hosted rare earth intersection. We've also started delivering results, and these are 2 metre comps at over 2% total TREO, which we'll obviously talk about a fair bit, total rare earth oxides. The other great thing about this discovery, we're sitting between, one, we've got excellent access infrastructure, we've got a highway and gas pipeline, and we're located between 2 processing facilities. One of those being currently built is the Iluka refinery at Eneabba, and I'll show you that in a bit more detail. Venture's been very much about tin and tungsten for a very long time in Tasmania. We've spent $50 million, been working that since 2007. Many shareholders ask me what we're doing with it, and right now we're working on the flow sheet, the back end, the tailing stream where we've got boron and tin sitting there. So looking to reverse engineer Chinese and Russian technology to extract more value at a revenue stream to make that a bigger underground mine. So we're waiting for that work as part of a Trailblazer hub to be completed, and we've engaged Argonaut PCF to try and extract some value out of the Riley iron ore project while the iron ore prices are high. Bit of a corporate snapshot, trading at 2 cents, market cap 45 million. We had just under $3 million in the bank as of the end of March, a little bit less now because of the drilling campaign. Still got an EV of 42 million. So you can see that share price increase there since February. That day we announced we doubled the price and we traded 235 million shares. So a pretty strong response to that intersection of 48 metres at 3,000 ppm. We have 8,000 shareholders. It's very much a retail stock. Dale Elphinstone, who's one of Tasmania's richest guys and famous for outdoor industry, is still a major shareholder of the company. The board, we're going through a bit of a change at the moment. Mel Ashton, the chairman, has told the market he's stepping down, so we're in the process of getting a new chair. As part of that event back in October last year, Philippa Leggett came on board. She's currently on in a rare earth company that's looking to list in London on an asset in Madagascar with Harina. So they've got a little bit of rare earth experience. Otherwise, myself and Stuart Owen and even Hamish Halliday, who's still consulting to us, we're all been part of the journey with Venture since 2006. I won't talk about vast range of projects. The Tasmanian assets are very mature, but around about 2015 we decided to go into Western Australia. We've got a nice collection of projects, including a JV with Chalice, which was a great idea about 3 years ago when our market cap was $200 million, but it seems a bit more of a poison chalice at the moment. So, but anyway, JV still exists. We have a JV with Sensor, which is an AI technology company, which is now Premier One Lithium. That's at Golden Grove. We retain the rare earth rights, so that's to the west of Jupiter. But I'll focus on Jupiter today, and we'll hear more about it. I won't talk much about rare earths. I think most people know about it. A colleague of mine said that a little bit of rare earths and everything makes it go better. So, that's pretty much good enough for me, but it's all those critical aspects, decarbonisation. It's very important, particularly the magnet rare earths, dysprosium, praseodymium, neodymium, terbium. They're the 4 key, more particularly the NdPrs. But we're trying to decouple ourselves, the Western world, if you like, from China, geopolitical risk. Location. That's what's the prime asset here at Jupiter. We have a highway running through, and I'll show you a picture of that a bit later on. It's got trucks running through it every 10 minutes. It's 300 kilometres from the port of Geraldton. We have a gas pipeline next to the road. We can drive to Jupiter on unencumbered access. We've got all the tenure that gets to the Jupiter project. We're located 250 kilometres from Iluka's Eneabba refinery, which they're currently building with assistance from the federal government as part of the critical mineral strategy. And that is besides the 20 kilometres from Jupiter to the bitumen road, it is bitumen all the way to Eneabba, and we're also 500 kilometres from Linus's Mount Weld concentrator. So well located next to two existing processing facilities, or about to be existing in the case of Eneabba, but also we've got a great infrastructure should we want to build something there. Okay, how did Jupiter come about? And the great thing about Jupiter is that this is a discovery based upon having found some rare earths in Tasmania. We decided, and look, it was clay hosted as well, we were quite interested in it, and we found an 1800 ppm result sitting at the surface from geological survey mapping. So this was Beinke ground. You're sitting between Mount Magnet and Golden Grove. It is, on a geological map, pink, boring, nothing's out there, no one goes looking out there. So the Geological Survey does great coverage in Western Australia. It's got broad gravity, broad mag, and this attracted somebody to do some work on this, and I'll explain that in a bit more detail. But we pegged the land holding based upon that. The Beinke project out to the east had the highest result. The Brothers had the third highest result. As we moved on, we did a JV on the Iron Duke project, which are those tenements in green you can see, and there's a guy there who got co-funding from the state government back in 2020, drilled two 61-metre holes, 200 metres apart on what he thought was another Mount Weld discovery. Very shallow drilling. He did a little bit of soils, very, very basic data, drilled out, very shallow holes, walked away from it. A gold company picked the asset up, and it's part of a private gold company, which was going to be listed but isn't now. And we did the JV with them, which was 250 grand to get to 51%, another 500 grand to get to 70%, which is where we are at the moment. We pegged more ground around it. We had that, you can see to the north, 10 k's to the north of Jupiter, which is, again, in that green area, green tenure. There's mineralisation, but there's that laterite sample, which I spoke about before. So at the surface, which is highly encouraging in terms of ionic capabilities. We drilled the first program, the maiden program, back in June last year, and we got some pretty exciting results. You know, we got 40 to 50 metres running 1500 ppm. We had a high-grade core of 10 to 15 metres at 2 to 2,500 ppm total rare earth oxides. So pretty exciting results, but Jupiter, still unnamed at this stage, is sitting in this area here. Then came the moratorium on drilling in Western Australia thanks to the Heritage Act. So it changed, and basically everyone was scared to drill from about 1st of July till about the end of October. So we decided to earn our equity, let's go and do geophysics. So zooming into that now, that's the mag on the left-hand side, and that's the gravity on the right-hand side. So the geologist drew a dotted line around it, and that became the Jupiter target. So it's defined by geophysics, potentially hard rock targets, but we were going to be focused on the clay. We had a little bit of deeper drilling. We understood potential as an alkaline intrusion target, not a carbonatite, probably a cyanide intrusion, but the scale of it and the size of it is still to be determined. And so off we went. We did some more assaying on those original holes. We got 11 metres at 3,000 ppm. That's down to 1 metre split. So the grade was clearly there, but then finally we were allowed to drill on the ground. And in November we drilled 25 RC holes, and we started getting more consistent results. You'll see through our announcements, 20 to 30 metre widths at over 2,000 ppm, sitting within 50, 60, 70 and now nearly 80 metres of 1,500 ppm zones, starting at like 20 metres deep, some case 5, and getting down to 100 metres. So huge scale, over to 40 square kilometres. That's what's exciting about this target. We then drilled a first stage resource definition drill program in December, 5,000 metres, and put the samples in the lab on the 22nd of December. And this is the record results we got. I just got the top 10 here because otherwise you wouldn't be able to see the target. Some exciting results. There's the 48 metres at 3,000 ppm. 600 metres away, it's 30 metres at 3,100 ppm. And right at the edge, the western edge of the deposit, the other yellow labelled, is the 79 metres at 1,805 ppm, with 16 metres at 6,000 ppm. These are pretty sensational grades, and very similar to some of our other peers out in the industry. More importantly, very similar to a company that's got a market cap that's probably 10 times higher than Meteoric in Brazil. So just remember that when I talk about those, they've got 409 million tonnes at around about 2,600 ppm at the moment. Our market cap's 45, like I said previously, they're around about 10 times our market cap at the moment. And when I start looking at these numbers, and it doesn't take much rocket science to work it out, 40 square kilometres times 20 metres thick, that's the conservative number, times the density of 2 to make it simple, it's 1.5 billion tonnes. And we've drilled this out now. At this stage it was 1k to 500 metre spacing back in December. We started getting higher grade results of neodymium and praseodymium, which I've can point to in this slide. It's 5,000 ppm. We're starting to get higher grade numbers as we get more holes, more results above 1% or 10,000 ppm. Same sort of percentages, 23% magnet rare earths, low uranium, low thorium. Sounds like a bit of a broken record, but consistency is what we're achieving here in this project in the very, very early stage. We needed to secure our land position, which I showed previously, so we pegged some more land. We're now connecting that 10-kilometre bridge, if you like, between that intersection we received back in the early first stage of 45 metres at 1,500 ppm. We have now unencumbered access. We've pegged all the remaining high priority targets in the area. We've got 1,350 square kilometres of this. So there's a lot more work to be done in this area. But at last batch of results, which we announced back on the 16th of April, had the second, third and fourth best results to date. And this is the guys on the rig. We had to actually run up there because we drilled this program in 4 weeks, 14,000 metres. It's $27 a metre. It's air core, blade refusal. It happened much faster than we expected. And we got up there and saw the team, saw the guys in action. Typically, the rig broke down when I turned up. Anyway, call it MD luck. But anyway, I went away and magically the rig started working again. But the guys did a great job. When you tell the driller, how's it going? And he just smiles and he goes, mate, this is 600 metres a day. This is like drilling Swiss cheese. So it's all moved very quickly and very cheaply. Our assaying costs the same as the drilling. So we're doing, 2 metre comps. Now we're pushing it out to 4 metre comps because the ore body's so large and so consistent. So yeah, great results. We've got up to 2.7% in assays. We're getting, if you like, our own project records every time we do more work. But those 250 holes got us down to a 250 by 500 metre spacing, which means we'll be able to get a maiden resource out probably in the middle of the year. We'll look to engage probably CSA Global to do that work. We've had preliminary discussions. And like I said, we're expecting that figure to be north of 1 billion tonnes and north of 2,000 ppm. So very significant high-scale project. This is got some serious footprint to it. There it is. Cross-section, 7 kilometres long, low strip ratio, mineralisation's open in all directions. I'm pretty excited about this. We expect potentially there's another halo around it, but we're just focusing on the 40 square kilometres because otherwise, if we want to drill the entire 1,300 square kilometres, we'd be here forever. But we're just going to focus because we've got plenty of tonnes here and plenty of grade. So in summary, just moving through quite quickly, we're going to focus on the 40 square kilometres. We're 300 kilometres from Port of Geraldton. We're getting a 90% success rate on our drilling. And some of the ones that haven't been successful are the ones that have hit bedrock, 10 metres down. So we haven't got much grade out of those. They're a bit lower grade because the clay exposure hasn't been huge there. Like I said, intersect 20 to 30 metre widths over 2,000 ppm very consistently. Now up to about 79 metres. The intersection went from 20 to 99 metres. We have some very high grade neodymium results, praseodymium, dysprosium and terbium and samarium as well. And what we're seeing is different pockets of different styles of mineralisation. Mineralisation that may suit, for example, Iluka with a low uranium and thorium, or places that may suit our Mount Weld project in terms of searching for those heavies. They're looking for these type of clays, rich zone, enriched in the magnet rare earths and more in the heavy rare earths. So because of the scope of this, we could easily have 1 square kilometre containing any one of those parcels of ore, or we could have 1 square kilometre of ionic clay. We simply do not know. We've employed a PhD in geometallurgy. She was up there on site. We've re-logged all the holes. We're classifying ore types. We're going to do the mineralogy of those, put those in, and then determine some metallurgical pathways So once we start learning, once you know the mineralogy, then you can start predicting what metallurgical pathways you have, and we'll be able to inform the market. So we know about that before our maiden resource comes out in the middle of the year. So like I said before, the infrastructure is super important. Here's just a couple of photos I just wanted to show you. In the middle of that photo in the distance, we just flew the drone up here. That's the drill rig. That's what it looks like. It is sparse. No humans. They're mustering. There's no cattle there at the moment. So this is very subsistence, pastoral land. If you've ever been to the Midwest, this is just typical. Highest trees, probably 3 metres. It's a great place to build a mine. There's no native title. There is no endangered flora and fauna. We get our tenements approved quickly, and we get our PRWs, Program of Work for Drilling, approved very quickly. There's a gas pipeline running through. It's myself and Chairman Mel Ashton sitting there. We drive over that gas pipeline. It's obviously well buried. And this is the road. This is heading, looking out back towards Geraldton. There's a truck there every 10 minutes. We turn it there. We thought we missed a truck, have to wait for half an hour. But there's quads, there's triples, going backwards and forwards all the time. So, certainly access to infrastructure. Like I say, it's remote, yet it's close to infrastructure. There's no people. This is not like being near the Amazon. There's nothing fertile. There's nothing growing. There's no farmers. There's no people. So what I like about this, it's permittable. And besides the grade, which is very important, and the tonnage, which is also very important, as well as the met. But the great thing about it is it's in Western Australia, and it couldn't be in a better spot, in my opinion. Next steps, we've completed 250 drill holes. You'll start to see those assays filter through in the next week or so, the first batch. And we're expecting each time we drill more holes to get better results, which is a great sign. So I expect to see the same again. Metallurgical test work, like I said, has begun with the mineralogical work, and the maiden clay hosted resource is towards the middle of the year. I won't talk any more about the other projects at this stage because the focus today is rare earths. But like I said, we think that we're pretty much in a position where we've propelled ourselves well above the peers in this in terms of grade and scale in this sector. The value proposition of a quick resource delivered, a quick large resource delivered in a short space of time and cost effectively. Mount Lindsay will continue to do the work on that. That's obviously tin and tungsten are critical minerals around the world, so they're important, and we're looking to extract some short-term value out of our Riley Iron Ore project. Thank you. Any questions?
Just what's the total heavy rare earths in a percentage, if that's so possible?
I'm going to give you a very boring answer, but as other guys have said exactly the same, I'm going to say it's about 20% for the NdPr and about 3% for the heavies.
Did you say no native title? Was that there was no native title?
Correct. Yeah,
How is that?
It's been extinguished.
How has native title been extinguished? How is that?
Claimants make a claim, and if the claim they can't prove access to the land, then it's rejected. Now, not to say there won't be claimants, but it's certainly at this early stage. But we're not sort of flippant about the heritage stuff, and even looking at flora and fauna, we'll have to do that survey work anyway, without doubt, because these areas just haven't been explored, they haven't been looked at. So that's there's no data at this stage. So that's kind of where we currently stand with that position. But yeah, so far so good.
Hi, Andrew. I'm very, as a investor, I'm very impressed with this project. My question is, what is your time frame to get this project to mining? Is it going to take as long as Mount Lindsay?
Yeah, look, Mount Lindsay is a different, totally different sort of project. Besides the fact that it's the scale of this asset makes it stand out, the location, permitting. But we're at the start of the journey now, and I had a question. Someone asked me a question. Well, how are you going to get a permit for a 40 square kilometre pit? And as I've said to several people, it's a bit like eating an elephant. It's one bite at a time. We're going to try and optimise the best places to get the most economic extraction first. If there's 100 million tonnes of ionic material there, we'll mine that first. The cheap stuff, it's a material to beneficiate, and truck to Mount Weld or to Eneabba, we'll mine that later. We'll optimise that. So the scale gives us so many opportunities. And 1 square kilometre can give you 50 million tonnes. So that's the enormity of it. 100 million tonnes is plenty. So let's not forget that. I drove 7 kilometres from one north-south and then east-west, and then that's going, well, my God. And people are, if you ever get up there and have a look, you'll be, if you want to go and walk it, go for it or run it. Maybe we'll have the Jupiter run one day. The enormity of the scale gives us so much opportunity, flexibility, and let's not forget the depth potential. We haven't even put a hole hardly deep at all. We're going to get some nice, deep targets from this drilling because we've got the bottom of the rock, we're going to map the entire base of it, and because it's intrusion, it's going to be different bits here. There's a project in Canada, for example, which is iron rich, and we're seeing a lot of magnetite because that's what it's a magnetic anomaly for, and that's rich in scandium. So who knows? Time will tell.
Are you looking at MOUs with the Lucia and Linus, what we speak?
What we'll do is we'll get an idea what we got first, and then we'll let them probably approach us. But if we can deliver what they want, then I'm sure we'll be talking in the near future.
Thank you. Now, in Mining Club tradition, we've got a couple of gifts for our speakers. If Alister, Travis, and Andrew, if you can come back up, I'd like to present the miners' flag on behalf of Julian. It comes from the Eureka Rebellion in 1854, when miners stood up to the British colonial authority for unfairly taxing those who were toiling in the mines. There you go, gents. The CFMEU doesn't have a monopoly on this symbol. Neither does the far right. It's the mining flag. Thank you, gents. Enjoy. Thank you. Now, I just want to promote something quickly before I let you go. It's a geotourism measure. It's the GeoFest 2024. We've got 2 of the proponents here tonight with us. We've got Patrick, Hannah, and Patrick and Angus down there. I think I've got a video here. It only goes for 30 seconds, but it's a good initiative. It's a bit of PR for the mining industry. Not that the rare earth sector needs it at the moment, but I suspect other parts of the mining industry do. Is that working? There we go. Yeah, so there you go. Great to support geology and Australian geology. 18th of July at Sydney University. Wherever you want to go to Indonesia, you're more than welcome. We've got Angus and Patrick down there. Thank you for your time tonight. Enjoy.